Morgan Housel on X wrote that he spoke to an investor who said, quote, "If the market actually processes what happened yesterday, it would be down 30 to 40%. The fact that it's not is either denial or a belief that it will soon be reversed." Now, if you don't know who Morgan Housel is, he's the author of The Psychology of Money. If you have not read this book and you're serious about money, you absolutely need to. It is by far the best financial book that I have ever read. I mean, I've read Rich Dad, Hard Dad, How to Start Your Own Business Bible. I've read Josh Brown's book. I've read Intelligent Investor. Like, they're all right here. This one now is really old. It was in my car for a while. It had a bit of sun damage. I've read them all. And that's by far the best. By a long shot. And this is what I've been saying, okay? That if these tariffs actually stay in effect, it's like Trump nuked the economy, okay? How do you price that in, accurately reflect that risk of the unknown? How long do these stay in effect? Do they not stay in effect? Do they get paused, canceled? Is there a deal that's worked out? It's really hard to say. And that's why over the last 2 days, the NASDAQ is now in a 22% drawdown, officially a bear market, and the S&P is pretty close behind, falling almost 5% on Thursday and almost 6% on Friday. I mean, this is a bad market. Now, there are signs out there that a short-term trading low could be coming, probably next week. And here in this video, we will go over the economic data that we have, earnings that we have, and why I think this low could be coming. But don't be fooled. The real question is, are we going into a recession? How long do these tariffs stay in effect? If the tariffs are paused, markets are going to love that, but it's still going to be uncertainty. And we're already tariffed by China. So what kind of retaliation do we see? That's also a big question. Now, surprisingly, you've already seen a lot of countries kind of back down from retaliation. Canada and Mexico seem to be okay with the current situation. A lot of Europe does not want to retaliate. Some countries do, like France, but a lot of Europe does not want to retaliate. China, they've retaliated. Some of the big news on Friday was that Vietnam wants to drop their tariffs to zero, essentially in exchange for the US to drop their tariffs to zero, in which that's kind of what we're presuming. But we don't know what's going to happen. Now, in this upcoming week, we have earnings from Levi's and Dave & Buster's Monday in after hours. Pre-market, you have Walgreens Boots Alliance, you have WD-40, you have Tilray. Tuesday and after hours, nothing really notable. Wednesday pre-market, Delta Airlines. Wednesday and after hours, Constellation Brands. Thursday pre-market, CarMax. And Friday pre-market, you have JP Morgan, BlackRock, Wells Fargo, BNY, and Morgan Stanley. Now, it will be interesting to see, what do the banks say about this? Bank stocks on Friday got absolutely obliterated as well. Do they, start to call for recession more? JP Morgan, they have a base case of a recession. But what does BlackRock say about this? What does Wells Fargo and Morgan Stanley and BNY say about this developing tariff situation and whether or not they think this is going to materially weaken the economy? And I think from a basic perspective of this, no matter what happens next, earnings estimates have to continue to fall. That's going to continue to put pressure on markets at the bare minimum. It's not going to be a positive catalyst for markets when analysts come out and lower price targets and lower earnings expectations. So that's another big pressure that whether we have a recession or not is going to be on this market. Now, in this upcoming week, starting off on Monday, and really like the first half of this week, you don't have much for economic data. On Monday, you have the consumer credit change, which I think can actually be important given, all of the fears in the economy. This is basically saying, what do credit card balances look like? Did they grow? How much did they grow by in the last month? You're looking at February. Okay, you're expecting 15 billion. Usually it's not a market moving catalyst, but again, if that number is negative or really low or something, that could indicate weaker spending data. Now, on Tuesday, you have the NFIB Business Optimism Index, expecting that to fall a bit, and it's been falling for a while now. But that's it. You have Fed Daily that speaks at 1 p.m. On Tuesday. On Wednesday is the FOMC minutes. Not expecting that to really move us. It's backwards looking. Markets really don't care about that. You do have a 10-year bond auction following what happened to the 10-year treasury yield over the past couple of days. That'll be important to see how much demand comes in. Thursday is your big data, CPI. So core month over month is expected at 0.3%. Last month, it was at 0.2%. So obviously, if it's higher, that's bad. If it's lower, that's good. And this is something the markets should react to, but I think it would mainly be in the bond market. Now, if inflation does not show that it's continuing to be a problem over the next couple of months, then the Fed will be able to accommodate markets. Then perhaps we can, get back to the Fed accommodating things, and that should help to support markets. Now, core year over year is expected at 3%. That would be down from 3.1% last month. Headline month over month inflation is forecasted at 0.1%. That would be down from 0.2% last month. And year over year is expected at 2.5%, down from 2.8% last month. So you're actually expecting a pretty benign CPI report, which hopefully could be good for markets. Now, initial jobless claims are expected at 225,000. They did come in lower than expected last week at 219,000. That will continue to be a pretty big catalyst. You also have a speech from Fed Logan at 8:30 in the morning on Thursday, and a speech from Fed Goolsbee at 11 o'clock in the afternoon on Thursday. On Friday, you have PPI month over month for March. You're expecting actually negative 0.1%. A lot of that probably has to do with the oil data. Oil has continued to fall, and there's been a lot of downside pressure there. So that should get picked up in PPI and have you actually at a negative number. Now, core PPI is expected at 0.0%. There's a consensus here at 0.3%, but a forecast is 0%. So you're expecting a pretty low number as well there. And we get the Michigan Consumer Sentiment Survey for April. Now, this has been a big catalyst for markets for the last 2 months. You're expecting the headline number will fall from 57.0 down to 56.4. 5-year inflation expectations expected to hold steady at 4.1%, the highest level in over 30 years. Keep that in mind. So it's just the high level that we're expecting to hold. Consumer expectations are expected to fall from 52.6 to 52.3. Current conditions are expected to fall as well from 63.8 to 63.4. 1-year inflation expectations are expected to hold steady at 5%, which is crazy in this Michigan Consumer Sentiment Survey. Because when CPI was 9% in 2022 and the talk of the town was prices going up, people did not have inflation expectations this high. Now, it's really skewed by Democrats because Democratic respondents are expecting hyperinflation, Republicans are expecting no inflation, and independents are like right in the middle at like 3%. So it's very political, if you will, but markets pay attention to it. I don't think it is very accurate of inflation expectations, but it could be and probably will be a market moving catalyst on Friday. Now, here's why I think markets are probably going to go through a short-term bottom. First and foremost, CNN Fear and Greed Index is at 4. The percent of stocks trading above their 50-day moving average is at 9. Okay, these are very extreme levels, and I imagine the new AI investor sentiment survey that comes out this upcoming Thursday is going to be really negative. The one that we had this Thursday was almost 62% bears, 16.3% neutral investors, and 21.8% bulls. That's really bad. But when you dig a little deeper and you look at the S&P, the daily RSI is at 23.43. The last time you were this oversold was the COVID crash, okay? And you hit 20. So you're almost like as oversold as the COVID crash, which is insane because last I checked, the economy was not being shut down overnight with who knew how long it was going to be shut down, right? So you're very oversold here. From a technical perspective, you're probably going to bounce. I said the same thing in early to mid-March that you were probably going to bounce based on technical factors, but that it probably wouldn't be a long-lived bounce. And I'm thinking roughly the same thing here. You're going to bounce probably in the first half of this upcoming week, but it's probably not going to be a long-term thing. Even if Trump, we get good tariff headlines, how much of it's actually going to be walked back, right? You've kind of crossed that boundary now with China retaliating against us as far as tariffs. So that's a problem. Now, could it get worse? Of course it could, but I think now the real question is, what effect does this have on the economy? Now, when you look at the SPY on a weekly candlestick chart as well, this is the fastest sell-off you've seen since COVID. This is, I mean, it looks pretty identical to COVID. But the weekly RSI is at 28. You have not been oversold like this, again, since the COVID crash when the RSI hit 21, almost 20. So you're just very oversold. No matter which way you look at it, when markets are this oversold, you tend to bounce. But even if we get a bounce, it does not mean I think we are, going to rip higher to new all-time highs anytime soon. In fact, I think this is going to be, again, like the bounce we had in March, where you bounce a couple points, a couple percent, and then you come back down as the realization that the pain to the economy is done. It's going to get worse from here. And the realization sets in that the odds of a recession are a lot higher than markets are currently implying. That it's like a guarantee, in my view, that we're going into a recession. That's when Tesla, broader markets, will come down quite a bit more. Now, for Tesla specifically, I will be going all in on Tesla at a certain point. I think there's no better stock to own for the long term that offers you the kind of risk reward that Tesla does with as little risk, right? To get a 10x or 20 or 30x over the long term in any company, you have to take more risk than like Coca-Cola, right? Coca-Cola is not going to do that probably ever in the future. Okay, if not, it's going to take a very, 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 very long time. Tesla, I don't think has that bankruptcy risk, but has massive upside potential. That's why I will be going all in on Tesla, but not in the 200s, around the 130s to 100s. That is my big, go all in kind of moment. Okay, now, here's the deal, though. If things get really bad, in the worst case scenario, Tesla's going down to like $50. Okay? So you need to be open for that potential possibility as well. If that happens, you still need to be prepared to buy more at that point. Perhaps, I guess that's where margin would come in between $100 and $50 on Tesla, just like an opportunity you could not pass up at that point, right? That's where I would do as much buying as I possibly could. Now, as far as when I think this will happen, probably summer. By August, you should be seeing the markets probably much lower than where we are today. And even though Tesla has robotaxi launching and all of the positive things Tesla has going on, it will still hit Tesla probably unrelenting, right? High beta, high growth just tends to do very bad during recessions. No matter what those companies are doing, it just tends to be really bad. And that is when I do think markets probably generally should be hitting a low as well in August, especially if, again, Q1 is negative GDP, Q2 is negative. We should have a pretty clear indication that we're going into recession by then. Okay. So let me know what you guys think about this down below in the comments section. Have a fantastic rest of your day, and I will see you in the next one.